Hey guys, hope you are all having a great day. I released a video earlier today, just because I was in pure shock at how the markets reacted to the bearish consumer price index report, and for some reason I started getting hate by people, saying I was not acknowledging that my prediction for today was wrong. Guys, let me put this here in the beginning of the intro when nobody has clicked off the video yet. I was clearly and vividly wrong about how today was going to go. My inflation outlook was correct, and we did dip to test previously built support, which I said would happen, and we did end red as well. What I was wrong was that we didn't fall as much as I thought we would and that we would rally today immediately after markets opened, which I acknowledged in the video as well. My earlier video was done to explain how things were going at that time, with AMC and GameStop running high after falling along with the rest of the market during the pre-market hours. I, along with tons of other people across all social media, were baffled by what was happening and wondering why. Obviously, we did not go downhill during the market hours today like I thought we were, so I was wrong on that end and I admit it. I have actually been talking about that since before noon on my Discord and my Twitter, laughing it off with people. I don't get why some individuals took it to chest and started going off about me not being honest and forthcoming when all evidence points otherwise. Maybe I did not express myself well, maybe I took it wrong, but you can't say I have been dishonest with anyone. We already talked about what was in the report, and I will go over it again really quick at the part of this video before I start talking about our performance today, just in case you missed it, so feel free to skip over that portion. Instead, I want to talk about other important news and topics that are pressing. Before we start, let me quickly state that I am not a financial advisor, and that all content discussed in this channel is simply information gathered that I deem important for people to know, so that they can make informed decisions. All efforts are aimed to better understand the nature of the current market in anticipation of the greatest squeeze in financial history. Let's dive right in. So we talked earlier about inflation, but we didn't touch a lot on the Fed, and for good reason. The numbers produced today, 7.5% inflation, are not encouraging, like not even by the most optimistic measure. Sure, the corporate media will try to ease up reactions by saying the rate is improving, but we are still rocketing inflation into the stratosphere. I honestly had my own doubts about being wrong and that inflation would be at 7%, but 7.5 is just too ugly. After the CPI report came out, markets priced in the expectation that the Fed will be raising interest rates higher and faster than projected. It is also expected that we will see full percentage points in increases by the end of July. Importantly, the difference between short-term and long-term bond rates collapsed. It's the only thing that actually behaved how it should have been. This puts the Fed against the sword and the wall. They are now expected, and will be forced, to force a sharp slowdown in the economy, and scarily enough, perhaps even force a recession. This is what everyone, especially the administration, wanted to avoid at all costs, but with numbers like today, there is just no way we can go around inflation anymore. Inflation is a giant monster that if not tackled directly and forcefully, it will break the global economy, and a forced and quick recession is no longer off the books as a means to end it, and it's not only me saying it. Federal Reserve Bank of Cleveland President Loretta Mester said she herself didn't see a compelling case for a half percentage point increase. It is unlikely the Fed will have any other option but to accelerate their tightening plans, no matter what it does to the administration and their own public approval. 75% of chief executive officers took a poll and said rate increases are unlikely to quickly bring down inflation, meaning the Fed may have just backed themselves into a corner they can't slime their way out of. Growing consensus, from what I have read, seems to show a growing sense that March alone will amount to a double hike. They will have to engineer a soft landing per se, which means pushing back on the economy just enough to get growth below where they think the trends are while avoiding raising interest rates too aggressively, which causes investors to panic. The Fed will want to walk a fine line and not provoke a market sell-off. Remember when Jerome Powell told us inflation was transitory? Yeah, but fat LOL on that. So yeah, investors are now expecting double rate hikes for March, so be sure to get a part-time because we could see stocks get really cheap very soon. I know I have been talking a lot about inflation and investors in the markets, but let us not forget the human component in all of this, the people. People around the world are set to get hurt by inflation. They could see yet another recession in just 14 years after the previous one. Home ownership will become harder for them to achieve. Wealth gap will only widen. Food will be less plentiful. Gas will eat away more savings. Asset ownership will decrease in the lower class, and the rich, well, they will cry to Washington for a bailout and blame retail for whatever happens to their trashy institutions. This is the point where I am going to repeat and go over what was in the inflation report itself, so feel free to skip this part if you watched my previous video, but if you didn't, please pay close attention. The Consumer Price Index registered 7.5% annual gain for the month of January, with the consensus being that it was only going to reach 7.3% yesterday. I knew that it was going to be higher than expected, and we were right. One thing that we must note is that inflation is actually a lot higher than 7.5% right now, in the double figures, but the government makes sure to use the best method that makes them look best. This sudden rise represents the fastest inflation has risen since 1982, as well as an acceleration from the 7% year-over-year increase that we saw for the month of December last year. On a month-over-month basis, consumer price increased by 0.6%. Also, as I talked about, the report showed that energy prices were the key contributor to the overall CPI, being up a massive 27% year-over-year. Within energy, fuel oil prices jumped 9.5% on a monthly basis and electricity prices jumped a pronounced 4.2% on a month-over-month basis. I know the markets right now appear as if the report was bullish, but these figures are scandalous to say the least. The core of the CPI, food, rose in prices as well by 1% during the month of January, while food away from home prices rose 0.7%. Excluding more volatile food and energy prices, the core CPI rose by 6% in January over last year, marking the biggest jump since 1982. Shelter prices climbed another 0.3% on January, led by an increase in rent prices of 0.5%, driving more concern around affordability for people to live under a roof. The stock market in general behaved very erratic and weird. Everyone, including myself, were left scratching our heads wondering why all indexes were going up. Everything seemed to be following the lead of the S&P 500. At the time of release for my last video, things were looking very bullish, but since then, it seems the markets are now coming to realize what I said, and stocks are beginning to sell off. Already in the after hours of me making this video, the S&P 500 is breaking through support like Kenny breaks through my savings. GameStop and AMC were the weirdest performers of today. They didn't just pop, they are freaking ran high. I was honestly left astonished, digging through every social media conversation to see what I had missed. Clearly, I said we would end red, and that we were going to be break through support like butter, but that's not what had happened in the market hours. In the pre-market, stocks fell, including GME and AMC, and we were testing support like I had anticipated, but market hours were incredibly bullish for the first half of the day. However, after I published my earlier video, things took a drastic change. AMC, GME and the rest of the stock market seemed to have caught a hint and began selling off profusely. GameStop ran from under 117 to 131 at its peak, only to close in the negatives, as did AMC as well. The only thing I can think of, and I mentioned this earlier, is that big money saw that all of retail knew the report was going to be bad, and they priced things in so that all those put options would end out of the money, at least a greater portion than it should have been. It wouldn't be the first time they did this either. Today didn't make sense. We got a report that shows terrible numbers and insinuate that the course of corrective action is a forced recession, and stocks went up. Saying markets are irrational is an understatement, but I think that as the day went by, the market started adjusting to the grim reality of what awaits it. Let's now talk about today. The Fed submitted over $1.634 trillion in reverse repo operations today. Dark pool trades for AMC accounted for 56% of the total volume today, while dark pool trades for GameStop accounted for 51% of the total volume today. AMC had a larger amount of buy orders than its sell orders, with GameStop also having a larger amount of buy orders than sell orders. Now, let's talk about performance. AMC traded bearishly, losing over 1% for the day. The stock traded bearishly during the pre-market, as the bad news of inflation weighted down on it. However, upon market opening, AMC flew almost to $21, a very bullish performance. However, after that nice run, AMC began retracing, and it eventually broke below the VWAP. It continued going down, closing at 18.59, below the VWAP. As for tomorrow, AMC will find support at 18.40, 17.50 and 17. Resistance will be met at 19, 19.70 and 20. It's impossible for me to determine what is more likely to happen. I think shorters will want to shoot this down below 18, but it's hard to anticipate anything right now. I continue being bearish on this AMC run, as shill as that may sound. This run still puzzles me and I think something is definitely up. GameStop traded bearishly, losing over 1% for the day. GME declined during the pre-market, with the news of a 7.5% inflation taking it down. However, upon market opening, GameStop began running, eventually passing 131. After that initial run, it began dipping non-stop until the end of the day, closing at 122.47, below the VWAP. As for tomorrow, GameStop will find support at 121, 117 and 115. Resistance will be met at 125, 128 and 131. I remain bearish on GameStop as well. I think shorters will want this stock closing below 120, and this run it has had for the past couple of days is very odd. Give me another dip below $100 and I will literally throw half my wallet size and portfolio liquidity at GameStop. And that is all I have for you guys today. Again, I'm sorry if I gave off the wrong impression in the earlier video today. I know I was very hyped and energetic while simultaneously puzzled and completely baffled looking at what was happening. I do acknowledge that we did not trade like I expected today, but the report was indeed more bearish than analysts anticipated, which I did call. Markets are irrational sometimes and stocks were showing just how separate they can be from reality, but I think that is dying off, because the number on that report promises hard days to come. Thank you all so much for watching my video. Let me know your thoughts below in the comments. Remember to check out this morning's video as well if you missed it, it's very important. If you want to support this channel, I have a Patreon link in the description as well as some one-time donation links for Cash App and PayPal. Thank you again for being a part of this channel. I will continue striving for better content. Enjoy the rest of your day, keep on buying the dip and to the moon.